Welcome to S&P's European loan market video overview detailing leveraged finance trends and activity during June 2012. I'm Suchit Gupta, a member of S&P Capital IQ's Leveraged Commentary and Data Team, LCD, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in July and early August 2012. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the more than 7,500 contacts in LCD's Leveraged Loan Group on LinkedIn. We're pleased to announce the launch of LeveragedLoan.com, a free website promoting the asset class. On it, you'll find recent market stats, news and analysis, leveraged finance job postings, and an online primer detailing the key terms of the leveraged finance process. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. The European leveraged finance market was cautious in June, with the markets being driven by fundamental credit selection rather than technicals. June saw a European monthly loan volume at 2.5 billion euros from 8 transactions. High-yield bond issuance stood at 1.4 billion euros from 4 deals. The secondary loan market finished the month down 17 bips at 94.31. High-yield bonds finished the month up 165 bips at 93.91. The S&P European Leveraged Loan Index, the ELLI, finished the month up 0.29% for the month of June. In the high-yield arena, there is appetite for well-established 4B rated issuers. Loan issuance slid from 5.3 billion to 2.5 billion in June. Loan prices fell in the secondary market while high-yield bond prices rose. Default rates also rose during the month. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices fell 17 bips to finish the month at 94.31. Loan prices fell an initial 41 bips before rising towards the end of the month. The big story in the secondary market was the acquisition of a stake in Alliance Boots by the investment-grade Walgreens from the U.S. However, Walgreens is not expected to retire the debt immediately, but the acquisition shows a clear refinancing route for one of the largest issuers in the market. This next chart details the average price of LCD's European High-Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. As the overall market tone improved, high-yield bond prices rose 165 bips to 93.91. This chart details the monthly return of the ELLI, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.29% for the month of June, up from the 0.1% in May. The total ELLI return for the first 6 months of 2012 is a positive 4.93%, versus 4.31% for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. June saw European monthly loan volume slide to 2.5 billion euros from 8 deals, down from the 5.1 billion from 15 deals seen in May. June brought the launch of long-awaited BSN Medical, which includes a modest dollar piece. The debt package is also supported by a sizable 391.5 million mezzanine tranche. Other notable deals were Alan Afalou and Global Blue, both of which encountered cautious investors and moved quickly to flex up margins and widen new issue price talk. Neither of these deals are large nor liquid enough to play in the U.S. market, so have had to run the gauntlet of the credit-sensitive European institutional market. High-yield issuance was 1.4 billion euros from 4 deals in June. KDG and Schaeffler both tapped the market, demonstrating that there is a bid for stronger 4B rated credits. The default rate by principal amount moved up to 5.5% at the end of June 2012, up from the 4.8% seen at the end of May. Meanwhile, the default rate by issuer count is now up to 5.3% at the end of June, from the 4.9% seen at the end of May 2012. Themes to watch going forward. The European sovereign crisis doesn't appear to be over as yet. We're still probably some way away from the closing credits. Possible inflows into high-yield bond funds on the track of interest rate cuts by the ECB, and more importantly, the tentative stability in the secondary markets. A to E to continue as issuers seek to address their maturity concerns, though the issuers that are now coming to the market are the weaker ones. Issuers will continue to seek to tap the US market for both loans and bonds, markets permitting. As the tone improves in the European high-yield market, there will be a number of issuers who will seek to access the market. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including US loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cheney. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.